Well, we are in a really, really interesting panel because we were always wondering how digital finance is going to change financial institutions. And we see a lot of improvements in the financial institutions. In the previous panel, we had the opportunity to see how the traditional finance is working and how the revolution of blockchain affects its operational, profitability, and business model. But the same thing is about the instruments. And we have a really, really vibrant economy with many assets, and many of these assets make sense to be tokenized. Today, we are going to discuss first time today, I think, the concept of tokenization of real assets. And I have a fantastic panel here with me. I would like to introduce briefly themselves, starting with Scott. Scott?
Good afternoon. Hoping you can hear me okay.
Yes, we can hear you.
Fantastic. Apologies. Sorry I can't be there in person to be with you, but great to be dialing in.
Introduce yourself.
Hi everyone. My name's Scott Thiel. So I'm the founder of TOKO. We are a highly sophisticated tokenization engine where we are taking real world assets, traditional and indeed new kinds of products and bringing them to market through tokenization. We are also in receipt of the first virtual asset brokerage and exchange licenses for full market under the Virtual Assets Regulatory Authority in Dubai, and have just announced that in the last couple of weeks, and now in the process of bringing some really interesting tokenized equities, real estate interests, and rare diamonds and gemstones to the market. So really excited about the market taking off in the Middle East. I'm also a board member and council member of Hedera Hashgraph Governing Council, and have been for the last few years. So fantastic to join you.
Thank you very much. Ming.
Hi, everyone. I'm Ming Choon, Deputy General Counsel at Ava Labs. At Ava Labs, we contribute to the Avalanche public blockchain. It's a smart contracts platform like Ethereum and many other layer ones. Anyone can transact, deploy applications, or use the open permissionless Avalanche protocol. I work on all sorts of legal, policy, and regulatory issues. We've got a number of other products like a self-custodial wallet. We have a hybrid exchange, and we also have a bridge. So looking forward to the conversation.
Gonçalo?
Hi, Gonçalo Carriço, Head of Digital Public Policy for Santander Group. I'm based in Brussels, so I focus on legislation, technology, how it relates with the financial sector, and I'm representing a traditional financial institution, but which innovates a lot. It operates in the European market, in South America, North America, and we are also involved in many of these issues related to tokenization.
Fantastic. Obviously, we have a very diverse panel who can approach the problem of tokenization or the opportunity of tokenization from completely different angles. And well, I was always saying while I was working in the European Parliament that the question is not about regulation, it's about always economics, what kind of economic value and what kind of strategic value you create if you adopt an innovation in the ideal world where all the regulations work perfectly for the market. So I would like to start the first round of questions focusing on the economics of the story. I would like to ask Scott first. What is the economic importance of tokenization? Why we need to tokenize real world assets?
So there's probably two answers to this, and I'm going to spend more time on the second. But the first one, I think, is that the technology allows a lot of what's done traditionally today to be done in a more efficient manner. And obviously that efficiency can ultimately feed through to greater investor benefits, profits, etc. So there is an efficiency play. But perhaps what's more important and what we're really focusing in on is taking assets that are either not serviced by traditional markets today or are serviced in a way that's very kind of opaque or very private market type assets, and then using the technology to really change the level of transparency and information asymmetry that exists out there. So what we do at TOKO is we put the deal into the token. And I was listening to the last panel with interest, how they were talking about crypto. And the difference between crypto and what we're doing is we're really putting, the full things that we would normally do as you would normally structure in a deal, including all the legal documents and rights. And we're embedding all of that into the token. And by embedding it into the token, we also provide greater transparency because these assets are now on chain. They're now got digital representations that can be accessed by people rather than private markets. So if I use a simple example like private equity, where does one go to find private equity deals today? Well, it's a network of who knows who and people making phone calls and people knowing what they know. So we've just announced the launch of a crowdfunding tokenization platform in the Middle East with a partner there. And so now we're going to have companies that are able to actually market and promote almost like you would in an IPO situation by actually providing access to these assets for investors, but also providing an opportunity for these earlier stage companies to actually participate in something that looks more like a public market offering, but at a much lower barrier to entry. Now, that's a relatively simple asset class compared to some of the things we're looking at. But what that's going to do is it's going to drive greater participation. And part of our journey is around how do we democratize finance? How do we allow more people to participate on both sides of the deal? So how do we make it easier for entities to do fundraising, to release equity in investable assets that maybe don't fit into the traditional finance models today? And on the flip side, how do we actually put power into the hands of people to control their own financial destiny to a certain extent? Now, that's a combination of the technology and the regulatory developments we're seeing. So one of the really interesting aspects of the licenses we've just obtained in Dubai is it allows us to sell what would be called a security token in other markets to retail investors without the type of restrictions, lockups, and other things that you might see in other markets. And so people talk about blockchain, being, a cornerstone technology to democratize finance. But if you don't actually allow people to play because you restrict things in the way that perhaps they've been done under traditional financial models, then it's not possible.
Mm-hmm.
So it's a combination of tech plus reg.
Thank you very much. So economic efficiency and the mission to democratize finance and the access to financial services. When Ming, your clients come to ask for your help, what kind of pain points they want to solve?
Yeah, we work with a number of partners globally, trying to solve lots of different problems in their respective industries. And so one of the things that they come across, apart from cost reduction, increased efficiency, certainly is improving liquidity for their assets. And so real estate is a pretty straightforward asset to talk about, right? It's a relatively illiquid asset. Obviously there are REIT structures that make that more simple to trade in the secondary market. But if you wanted to sort of tokenize a building, or a development complex, and allow people to have access to it in a way that's transparent, then tokenization is one good pathway to do that. And I think we have a very sophisticated audience here, so we don't have to dive too deep into what tokenization is. But it's just the process of digitizing an asset by representing it in digital form, with the additional step of putting that on a blockchain. And so when you go from an analog form to a digital form, it obviously opens up many pathways that allow you to better track, administer, recall if necessary, and just do a whole bunch of different things. Another type of use case that we see from partners is solving liquidity issue in games. So gaming has become a very big industry, and we're working with partners in Asia, in Korea, and in Japan especially, who want to offer their products to their customers with in-game items that are tokenized. And so, instead of having the item be just bits of code that is controlled by the game studio, these bits of code sit on chain, and so it's owned by the user themselves. They decide how they want to use it. They can transact. They can use it as collateral. And so, from these two examples, you can see that once you move something on chain, you can do some pretty interesting things with it that you weren't previously able to do easily in the real world. And that concept is composability, right? So, if we can sort of look at a scenario where you issue a stock on chain, so you've got a tokenized security, and you want to use that as collateral to borrow either USDC or borrow some other token, I can take my security token and deposit that into a smart contract that then allows me to borrow against that collateral, right? In the real world, we obviously do this, right? The escrow accounts and things like that, quite a lot of manual process involved. But through on-chain tokenization, the process is a lot more efficient and instantaneous. But it doesn't end there. Once I have the token that represents my loan or the borrowing from that smart contract, I can put that token into yet another smart contract that, for example, securitizes all the cash flows, any yields from this process. And so anyone can develop a smart contract, an application, deploy that on chain that can be used by anyone else. And so what it creates is a very open, permissionless way of collaborating, where you don't have to trust that they wrote code that's going to do what they do. You can inspect the code and verify it does exactly that.
Gonçalo, we Ming represented how you disrupt the value chain. And the financial value chain is very, very straightforward. Placement, trading, clearing, and settlement. What is the meaning of tokenization for a bank?
Thank you for having me. Let me, before I reply to your question, actually, I was somehow disappointed when I arrived here. I was expecting my badge to be tokenized. So I hope at least at the end of the conference, I will get a certificate in the form of an NFT or something. So I'm the least expert here in the house, but it's the...
Smile girl, your NFT?
That organization, indeed. So it's true that the most use cases and the clear use cases, as was mentioned already for the fellow panelists, is in the financial sector. And despite because of everything that is involved in technology, there's a lot of innovation coming out of there. And it's clear the use cases in finance. It's structured, as you said. Nevertheless, I think tokenization can go outside of financial sector and go to other sectors. And that's the call that I would make here for this community in order to engage with the institutions, governments at local level, at EU level, to explain what tokenization is, to raise awareness, to educate governments and also SMEs and other corporates, because tokenization can mean anything and mean nothing as well at the same time. So there is awareness to be made because the potential is huge. And there, I think, in the EU's priorities that we see it in the green and digital, this ties very well to tokenization, because if you jump out of finance again, you can see where tokenization will improve in traceability, in performance. Also, you can see how tokenization could help tokenize energy, for instance. It's an example. Or in the social dimension, in selling flight tickets, or as my football club is now putting things into NFTs. I mean, there's a lot of potential outside the financial sector, and that's where the economics comes into play. Because one thing Europe really needs in the next 5-10 years is fund the needs for defense, social market economy, our social model, and where those funds will come by increasing productivity. And tokenization can effectively increase productivity with automatization, programmability, smart contracts. All those efficiencies go in the value chain and increase growth in Europe. That's what I think this community could be promoting more heavily, and I will do my part here in Brussels as well in expanding beyond the financial sector, which is the most obvious and clear use cases, of course.
The tokenization of everything. Almost everything.
Almost everything.
In the end of the day, it's not a silver bullet. We have, for specific asset classes or specific sectors of the economy, significant profits in the liquidity dimension or financial frictions that are removed, like or cost effects that go further. And when I try to explain to traditional sector how this may work, I always have a straight line of the long-term average cost that goes down and the demand curve that goes to the right, and this expands the value triangle. And this is everywhere. I have a question here, if it can be used tokenization for sustainability, for example, emissions trading certificates would be a very good and solid use case. We see economic benefits. This is one thing. But still, when you are in an organization that works pretty fine, it's very difficult to take a decision, to make a decision to move to something new, painful, that might be not so scalable in the early stage. In your experience, and I want to ask all of you, what are the factors that reduce the willingness of traditional players in sectors that more or less work to move forward to a tokenization project? Is it technology? Is it lack of understanding of the economics? Is the reputation risk? What is it? And I would like to start with you.
Yeah, so I think from my perspective, I'm sure we'll all cover the same few things, but just two things to focus on. The first, obviously, we're at a policy forum, so regulatory uncertainty is top of the list. There is a sort of tendency that somehow a lot of policymakers and lawmakers have become comfortable with, which is to assume that once something is tokenized, it is very likely to be a financial instrument, and to try and apply financial regulations on the things you can do with these, so-called financial instruments. The reality is that tokenization is just a very generic term. You could apply that to any type of asset. And it doesn't necessarily turn it into a financial asset. We talk about real estate, we talk about in-game items. There's many ways in which an item can be represented digitally and used. And so I think for an institution looking to tokenize assets, right, whether they're used with customers or offered to customers, they are worried about how it's treated under financial regulations, AML regulations, sanctions regulations, for example. It's just the cross-border permissionless nature of tokens, at least on public chains, that cause these issues to come to the front. And so in the US, as everyone's aware, the debate is still going on. Is something a security? If it is, then it will be regulated under federal securities regulations overseen by the SEC. If it's not, then it's a commodity. But it really could be anything else, right? Like you mentioned, concert tickets, a membership to a football club, fan club. There's no reason to treat them as financial instruments and to have to worry about it. So obviously in the EU, you guys have done an incredible job with MiCAR and are now pretty far along the path to providing even more clarity. In the US, that's not quite the case, although a lot more momentum to try and propose something. I say the other one worth mentioning is user experience. I think institutions have a scalability issue, which is from a UI perspective, they need to make sure that their employees, their customers know how to work with on-chain assets. And so the days of requiring people to remember a 24-word passphrase, right, write the mnemonic down on paper, store in a vault, won't work in the commercial and corporate worlds. Thankfully, there have been advancements in technology. There are concepts like account abstraction, where people can choose how they want to access their assets on chain. There are social recovery mechanisms where you can build in more traditional style authentication using third parties. And in some cases, these third parties don't even know what's in your passcode file because it's fully encrypted and offer in a way that does not make them a trusted intermediary.
Well, Scott, when people come to meet you in order to help them with a tokenization project, what makes their hands trembling when they're asking you to do a project on tokenization? And what words of comfort you use in order to appease them?
Yeah, it's hands tremble is probably a good phrase. I've had the benefit of trying to do this in many countries around the world. So I've until recently been based in Asia and Hong Kong, previously based in the UK. We've been doing transactions in North America, Canada, the US. And the honest truth is it's very, very difficult in most places to do a security token offering from a regulatory perspective. The TradFi rules and requirements are in many respects not appropriate for digitized assets. There are things like mandatory transfer agent requirements in Europe, where you need an independent, trusted external third party to now take immutable information off a blockchain, introduce human error, cost, 3-day settlement, delays, and make it worse. But the law's been written with, for good reasons, historic reasons about the need for independent, transfer agents. And so there are a lot of challenges to actually get deals done, to be honest. And so that's what frustrates clients. We've been in regulatory sandbox environments in multiple jurisdictions. We've had high quality listco asset owners with very investable assets. We've had institutional investors lined up, and we've all gone in there and said, here's the brokers, here's the advisors, here's the asset owner and the investors, and they'd all like to do this. And we just cannot get deals away. And we're seeing that still in Europe, although the position is improving. We're certainly still seeing challenges for real world asset tokenization in Asia. There are actually routes to market in the US, but because of the sort of heavy-handed nature of the regulations, it's a very expensive business. And so, that sort of democratization of real world asset participation is harder in the US because really you're having to come back to traditional kind of Reg A, Reg D or offshore Reg S type structures, which charges very, very heavy-handed for trying to opening up the market. But that really is the challenge is we can do it. We've got asset owners wanting to do it. We've got investors wanting to buy it. And then we sit there and say, well, these are the problems of actually getting these deals away in your particular jurisdiction. That's what's interesting and why we've expanded TOKO and why I've relocated to the Middle East, because the regulator there has said we would like to make it possible. We would like to encourage this new financial ecosystem. And so they have made it now possible. And there is no question of who my regulator is. Is this virtual asset regulated or not? I mean, I think the other comment about should they all be considered financial instruments? I don't know, but we saw what happened when you have things like OpenSea. It's only a harmless NFT. Well, actually, it turned into a multi-billion-dollar, place for fraudsters and rug pulls and other things. So I'm not sure I agree with the view that those things shouldn't be regulated, at least the market operators dealing in those assets, because they are very large marketplaces, as are indeed crypto exchanges. So again, what the Middle East did, which is fundamentally different, for example, than other places, they've just said, any tokens of any sort deployed on a blockchain, they're a virtual asset. And if you want to provide services like exchange, then they're going to be regulated services.
Mm-hmm. Gonçalo, you mentioned a wide range of opportunities in tokenization space. I suspect that a bank of the caliber of Santander should make a choice what to tokenize first, and what to tokenize second, and what to tokenize never. Within the strategy of a major organization like yours, what is immediately reasonable thing to tokenize in your operations, and what maybe you should never tokenize?
Well, I think I'm not the most appropriate person to take that decision, but I hope that your comment on the category of an organization as Santander is a positive one. But
The banks.
The banks in general, yeah, indeed. There's in this context, there's some immediate assets that you can, as bonds, and something that I would like to talk later, which is about payments. So in the payments ecosystem, we're going on chain. We listened before in the panel about CBDCs, which is also important to note that there's a lot of development about CBDCs around the world, in Europe as well, but maybe some of them are missing the point and where should be tokenized or not, which we think they should tokenize deposits. Here an answer for you as well. But coming back a point, I think one of the challenges that happen in general, not only in the financial sector, but also among other sectors, is digital literacy and financial literacy. That's why my call for awareness to get education programs and explain to citizens and to companies and governments what this is all about. That is not the utopian or the dystopian ecosystem of crypto. And the second element is trust. I mean, for us, the decision between what to do or not to do, it always relates to trust. And to have trust, you have to have a solid framework, a legal framework, in order to operate. And I think in this case, Europe did a good step forward with Ming and the DLT pilot regime. I mean, it's not bulletproof. It's not 100%, but it's a very good first step. And here, my call will be that the so-called Brussels effect will, in reality, turn around other markets and quick.
The next question.
And quicker, because I think we operate in a global scale, so fragmentation doesn't help. Fragmentation in Europe is already difficult to handle, so at the global scale in markets like this is quite difficult. And speaking about financial assets, I think the fractionalization of assets is an added value for investors, because you can bring more, that's financial inclusive actually, because small investors can actually put their money there and also participate in these investments. So that's something that should happen in an ecosystem that's not fragmented. You can even attract a diversity of investors from elsewhere. So I think that will improve liquidity also for companies and SMEs in particular in Europe for invest innovation in greening all the priorities that the EU has. So I think it's a huge opportunity again.
Absolutely. And the idea of fractionalization of assets gives first time in the history of finance the possibility to have the theoretical model of CAPM implemented through the capital markets line. Well, I had a similar discussion in Chicago last summer with Fama.
Since we still don't have a capital markets union, I mean,
yeah.
it could be.
Well, your last comment about the impact of the elephant in the room, the regulation. Considering what you can use in order to tokenize a real asset, you can see it everywhere in the possibilities you have. You can have an asset reference token, tokenized, NFT, tokenized. It can be a financial instrument tokenized. So it is about, again, all the regulations of the European Union. And I would like to ask you all, to which extent you believe that the regulatory certainty will accelerate this, and how much European Union will affect other jurisdictions in the concept of Brussels effect. And my last asterisk that I would like you all to answer, to include in your answer at least, is what do you expect from the European Commission in the coming 5 years to introduce in order to accelerate tokenization of real assets? I would like to start with you, Gonçalo.
Well, following up on what I just said, I think they stepped ahead with MiCA and DLT. It's not perfect. Some things were left out, like NFTs and DeFi. I think there's room to go in that way. But also,
you mean it made it perfect that it's not NFTs in this regulation, right?
It should be there. It should be there as well. Again, one of the things that most people might be scared of is because the technology stemming from this ecosystem mainly came from crypto, and crypto might have different notations and bring some fears. So if trust is enabled through regulation, supervision, a proper framework, you might agree or not disagree, but at least you know what to count on. I think that brings, at least for us, it brings somehow some confidence that we can operate and do some stuff and break some stuff, but in a controlled environment, in a sandbox environment, let's call it like that. So because that's where we are looking at, we have set up some labs in order to explore opportunities. We made some real exercises, but real experiments with real money, with bonds, for instance. So I think that the regulatory environment is really key, but again, not just in a market. That should be spread over many different markets in order to make it global.
Absolutely. Scott, Thiel, you have regulators of the European Union here. What is your advice? What you expect from their side?
Yeah, look, the number one advice is regulatory certainty. I mean, we see a diverse range of asset owners and issuers from across the world, and I'm working with, you know, a range of issuers and also regulated players, both in mainland Europe. And what's I think the number one message I'd love to give is one of regulatory certainty. the overwhelming challenge, and I alluded to it before in terms of just what is my route to market for those who are wanting to do it well. The truth is that those wanting to do digital issuances in the grey area will continue to argue utility and various other things and assume they're unregulated. The real challenge we see, because we typically, part of our deal qualifying processes is not to deal with people who are trying to circumvent regulations. We're actually looking to deal with high quality issuers that are looking to issue within the full gaze of regulatory oversight, and equally to attract the type of credible investors that fully expect the types of normal things. This is the digitization of rights. That's what I see it as. And so where people are used to seeing full and adequate disclosures, so they should still see them in relation to asset reference tokens. And so for me, providing certainty for those who do want to do it in a regulated way, and actually then clamping down on those that are skirting around and trying to claim utility and therefore not being regulated, that to me would be the number one ask, along with perhaps, and we're starting to see this again, people may have seen an interesting MOU signed between the SFC in Hong Kong and with VARA in Dubai, portability of assets. This technology, as we've seen with crypto, enables rights to move, to trade 24/7, to move seamlessly from venue to venue, from geography to geography. Now, a true, democratization of and global ecosystems, the liquidity that will come with that, do require assets to be mutually recognized as being, credible and legal. And we're beginning to see some of those happening. So to me, it's make it clear how to get a deal away, and then make it clear as to how these assets can move from one venue to another.
Thank you. Ming, Scott is in the Middle East. You are in the United States. Question number one, do you see the regulatory frameworks around the world, because you are a global organization, converging or diverging? And do you see the initiatives in the European Union being helpful for what you're doing?
Yeah, I certainly think it's helpful. It's very good signal to see a very collaborative process across the 27 member states in coming up with MiCAR and continue to work through the level 2 and level 3 stuff. I think as much as I would like to have a harmonized approach globally for all the reasons that other panels have talked about, there are always going to be differences because it's every country has a different political system, a different process for lawmaking, and different level of engagement with industry. So, for example, in the US, the market structure bill that was proposed over the summer, I think Scott mentioned, that the drafters of the bill explicitly said that they intended to maintain the status quo of splitting jurisdiction between the SEC and the CFTC. And there was a conscious choice they made, and it's very easy to understand why they wanted to sort of maintain that division. And so the question of how to harmonize is challenging, but hopefully there are useful things from MiCAR around the responsibilities and obligations of an issuer, an exchange that carry through. And I think there's good reasons to think they will carry through, because these tend to be centralized entities that maybe aren't so different from the types of centralized entities we see in the non-blockchain world. And so, just on that point, I think it's important to remember that there's lots of laws and regulations that already apply today. If you were to tokenize real estate, an actual house or a building, and you wanted to transfer title of the house to another owner, whether that's done on a blockchain or done just over a land registry or a title deed, right, a piece of paper, ultimately you have to comply with the rules that already apply to transfers of real estate. Putting them on chain doesn't negate that, unless laws are put in place in the future that recognizes an on-chain transaction as being the source of truth rather than the real estate title. And so as we think about different types of tokens, right, and obviously MiCAR recognizes at least 3 types, it's useful to sort of talk about how they intersect with existing rules. And so our view is that a sensible token classification should take into account the nature of the asset, rather than treat the virtual asset as a single thing. And if you look at the types of assets out there, I'd say there are broadly 4 categories. There are tokens that represent physical assets, tokenized gold, real estate, tokens that represent services, access to a concert, a membership club, right? Some other service you can pay for. Tokens that represent intangible property, could be IP, it could be a financial instrument. And the fourth category, which I think and I acknowledge is novel, are DLT tokens, right? So ETH, Bitcoin, these are natively existing on-chain. There is no mirror in the real world, right? And they're inextricably tied to the operation of these chains. And so for these types of tokens, it is useful to think about whether new rules should be made, how they should be thought about. But for everything else, the old rules already apply. And so we should remember that writing new rules means that there's now an obligation to comply with two sets of regulations when you issue tokens of real assets that are already regulated.
We have 1 minute,
could I-
and I
could
would
I
like. Yes,
Could I jump in for a comment on that, if I may?
sure.
Because I think, I think it's right to think about that in some respects in terms of that separation of the assets. I think what I'm seeing though is the technology is now allowing innovation, and we're seeing this intermixing of those very traditional things where you're seeing economic interest that might be referenced to an underlying asset, but now because the technology allows it, let's include some utility or some loyalty or some functionality. And now we've got this interesting thing in digitized form. Why not include some sort of DeFi solutions like we see from crypto? And so we're now creating these kind of chameleon assets that just don't stay put in the traditional buckets. And I think, my experience of trying to get projects away, particularly in the US, is it's very hard to start out, well, who is my regulator, particularly as they're still trying to work out, who regulates even a Bitcoin's not clear. The major, regulators are still arguing over even that most simply of examples. And so it's very hard for people to know where they sit. And then the more complex token types, they just literally look like different traditional legal things depending on how you're using them and what's happening today. And so that's why I think it's problematic to try and split them out. And I think there is more merit in actually starting to look at, well, they can all be treated the same, and you can have generic rules rather than having mandatory things like disclosure requirements. You can have disclosure principles, rather than mandating it needs to say this, that, and the next. You can just say it needs to give the reasonable investor a reasonable amount of information that they can understand what it is they're buying. In the case of a digital art NFT, that might not be much information. In the case of a complex financial instrument, well, now it's a lot more information. But providing that freedom within the regulatory drafting, I think, is going to allow more creativity.
Fantastic.
I know that's not always that.
Good. Any last word from your side?
Just a small one. I think the issue with the recognizing existing legislation into this new world is exactly digitalization. It's the fact that when laws were made, they recognized an ancient physical paper-based something, and interpretation might make them think that a digitalized format might not be equivalent. So that's why new regulations are coming up to cover that situation, because it makes an uncertainty at that level.
True.
Totally understand. That's very fair. I will just add that people already do trade things that are NFT-like in the real world. People buy and sell cars, for example, or as a hobby, maybe even as a business. And these are not activities that are currently regulated the way that financial instruments are regulated. And so it's a question worth thinking about. Do we want parity when we have rules that apply to real world assets versus real world assets that are tokenized?
True.
Because in my view, the overlap is great.
Absolutely. And with these words of wisdom, I would like to thank a lot Scott, Ming, and Gonçalo for being together with us today and sharing their experience with us. Thank you so much. Bye.